Hi, this is Bob Phillips, Managing Principal of Spectrum Management Group. We're here today to talk about income tax breaks for single people. Bottom line is the tax breaks for singles are pretty much the same tax breaks that you would have if you're married. There's not a whole lot of distinction. So really the key is to focus on what are some tax breaks that are often overlooked, or maybe some unusual circumstances that people don't think about when they think about tax breaks. So I think health insurance is one of the key things, and it's always a matter of going back and making sure you understand your employer's their health insurance systems they have set up and programs they have set up. Oftentimes employers will have what is called a medical reimbursement account, and people don't take advantage of those. Single people in particular. Single people are actually relatively notorious for just not having health insurance coverage. I mean, they're young and invincible, and they just don't think about it. But a good way to save some tax dollars, even for routine type medical procedures, is to join that medical reimbursement account. And what you're effectively doing is you're avoiding having to pay the Social Security tax on those dollars. If you do spend money out of pocket to see your doctor for an annual checkup or whatnot, it can be 20 to 30% cheaper than paying it with after-tax dollars. Another overlooked deduction is oftentimes education credits. So if you're in school and working towards that degree, there's credits that are available that you should certainly look into, and they can be rather substantial, 20% of the tuition and some of the costs you're paying. You should always fund your IRA account. It's never too late to plan for a rainy day, and the sooner you start, the more valuable that is for you, and you get a tax deduction if you choose the traditional IRA along the way, and if you don't, the Roth puts money in a tax-free environment forever. And one unusual circumstance is you ought to think about actually when you choose to get married. It's not unusual when two people that are working get married, their combined income can put them into a higher tax bracket than if they were both single. So if you're planning a wedding towards the end of the year, you might do a quick little analysis to see if you're better off waiting. And if it might save you some tax by waiting until you've got to file a joint return and make it a January wedding instead of a December wedding. So there's a little catch or gotcha in the tax code that you're now aware of that you might try to avoid. This is Bob Phillips, Managing Principal of Spectrum Management Group. Thanks a lot for watching.